Hello and welcome to Pro Trader Strategies Market Commentary for Monday, January the 28th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I am here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, it's Monday. Not a whole lot of economic data coming out today. The markets are moving off of news, if you will. Mario Draghi is expected to be speaking, but I don't think that he's really going to be doing anything really whatsoever. Let's talk about the markets. So on the markets, we've got crude oil moving off by about almost $2 today. A lot of this is going to have to do with those supply-demand things. We have a huge amount of supply, very little demand, or not as much demand as we would expect, and that is causing the prices of crude oil to come off. That being said, with the equities being negative on the day, we've got a huge move today in gold futures to up into the 13 handle. I didn't expect it to get up into this 13 handle. I was thinking it was going to come shy and start rolling over back towards the mid to lower 1200s. That is not the case. Luckily, I don't have any positions on in gold, but this move today in the equities is causing a flight to safety and driving gold higher into that 13 handle that we have not been able to really sustain other than from Friday to today. And then we've got the bonds. They are moving a little bit higher today. It's pretty quiet in the bond market actually because it doesn't have a whole lot of move unless we start hearing more information coming out of the Fed or we start getting economic data, because the economic data is really what's going to be driving the bond market these days as we try and discern whether or not the Fed is going to have to stop increasing interest rates, which I believe that's the mandate now that they are really leaning towards, is that they are not going to probably raise rates in 2019. But it could start looking like there's going to be some easing probabilities going on where they have to lower interest rates. So that's going to be a driver of the treasuries. All right, VIX moving higher by over a couple of points into that 20 handle. That's where I'd like to see it be because we are trying to discern whether or not we're going to be doing premium selling strategies or premium buying strategies in an earnings season. We'd really like to see this volatility at its highest so that we know volatility will come in. So I'd like to see some more volatility creep into these markets, give us some better premiums, allow us to get further away from where the current underlying is trading with the same amount of probability. So when those volatility starts coming out, those probabilities shrink quite dramatically and will allow us to get out of these strategies quicker, all right? Or if we thought it was low implied volatility, that expansion of volatility, take advantage of that. So right now it looks like we are looking to expand a little bit. But having said that, volatility is pretty high and we are around an earnings. All right, Dow Jones Industrial Average down over almost 350 points. That should sometimes shock people, but we've been having some pretty big moves on an intraday basis, and we really haven't moved anywhere from, last week, if you will. We're still in that range, despite the fact that it feels like we have a big sell-off happening right now. We are very close to this point of control, and it is going to act as a magnet, trying to draw the market closer to that. So I think that we are about at that area where we might see some pushes back and forth, but I think for at least this week, since we're lined up there with those point of controls, it's going to try and break out of that range, but eventually come back to the point of control. NASDAQ coming off over 100 points today, big move. Late day strength we've been seeing in these markets. Hopefully we continue to see that. That late day strength really is a signal of bullishness. Now, we don't want to see that late day weakness because that is a very big sign of, bearishness in the markets. I don't really see these markets, even if we settled where we are, to this week trade much below, if at all, this value area low. I think the Fibonacci is going to hold there, and we will start bouncing up and away from that if we come down to test that. My market assumption is that these equities are going to migrate back to the point of control and settle down there at least for maybe like a week. E-mini S&Ps, again, breaking down, looking to test the value area low. I don't see us getting much further than that. I think it will act as a nice little support and bounce up and away. And again, back to the point of control is what I'm looking for the equities. If we look at the daily chart of the E-mini S&Ps, this is a breakdown, 30-minute candles. Each blue section is a day section. You can see overnight inventory was getting short. No attempt really to flush those guys out. And then in the day session, accelerating that bearish sell-off here. We found a little bit of support in the last probably 30 some odd minutes, 30 minutes to 45 minutes. We found a little bit of support. So a rally up to the highs towards the end of the day would be very strong. And if we kind of hold off, any type of push to the upside would be good at the end of the day. So as long as we aren't finishing making new lows, continuing to make new lows, or finish right on the lows, I think that we are looking pretty good according to my market assumption. The only thing that I really have, my portfolio is negative delta heavy, if you will, only because I have very few trades on. One of those being IWM, that is selling some calls to the downside with the volatility expansion today, and the market direction. It really has kind of offset one another because of the volatility expanding, making my premiums inflate a little bit, is offsetting the delta adjustment to those premiums, which as the market goes down, I should start making money, but it's completely being offset by the volatility expansion today. And that's about it. I haven't added anything. I'm still doing jury duty until Wednesday. I haven't added anything. I've looked at some earnings trades for tonight, and I don't really see anything. There's 3M and a couple of other ones, but those aren't really earnings trades that I really get involved with, because the bid ask in a lot of those markets that are having earnings today are pretty wide. So I'm not going to probably mess around with that. And that's about it. The rest of the week, I'm going to try to find some trades to put on, despite the fact that I'm leaving here very shortly to go to jury duty and don't have a whole lot of time to really look for things during the day. So hopefully I can find something at my lunch break, and I'll let you guys know about that. All right. So if you can't take that, take it easy.